as we're seeing this whole sort of monetary regime, even at the global level, sort of being rethought now, a lot of people are asking the question, how will Bitcoin perform in this environment? And one of the narratives around Bitcoin, of course, is that it's digital gold, and gold has traditionally been a safe haven asset. Okay, so you buy gold when you're not so sure about, you don't necessarily want to take risk in the markets. Okay, so that's how gold has been thought, and that's one of the narratives around Bitcoin. Now, this brings us to a report from J.P. Morgan that was just released, basically, where they're saying that Bitcoin's safe haven asset narrative is in question. It's increasingly becoming into question. They're citing 3 straight months of ETF outflows and weak Bitcoin futures interests. Meanwhile, as everyone knows, gold has been attracting strong inflows. We just hit another all-time high, I think, yesterday, from both retail and institutional investors. So gold is positioning itself right now in this reordering of the global monetary order. If that's what is actually happening, gold is positioning itself as the top beneficiary of the safe haven and currency debasement flows.
Yeah, definitely. And this has been happening for quite some time, definitely since COVID, when the whole world just started printing money, tons and tons of money. And Bitcoin has done really, really well during this time too. I think for me, this particular report has kind of short-term implications, perhaps, because, Graham, as you know, and as we've covered for the past month or so, but in the past couple of weeks especially, there's been a lot of talk about how this is Bitcoin's moment, right? If Bitcoin is this hedge against monetary debasement, if it is a hedge against risk, certainly now is the time where Bitcoin will show itself in some degree. And so I feel like this report is maybe throwing some cold water on that, being a wet blanket, if you will. I personally think that the report doesn't matter in the long term, because I think it's going to take a lot longer for this aspect of Bitcoin to play out. I don't know if you have feelings on this, Graham.
Yeah, I mean, that makes sense. Like, obviously, gold has been around for thousands of years. It's always been the go-to hard currency around the world, and Bitcoin is like 16 years old or something, and so it's not surprising that it hasn't fully picked up that narrative yet.
Yeah, and also like the what's it called, the overall market cap of the thing is tiny, even compared to gold. So the smaller the market cap, the less liquidity it has. The less liquidity it has, the more volatile it'll be, which means it'll be way harder to find signal in all that noise. So I don't know.
Yeah. So the gold narrative might not be there just yet for Bitcoin. However, I think what is indisputable is that more and more institutions are looking to Bitcoin as not necessarily a safe haven play, but as a corporate treasury play. So we have this this report from Bitwise. It's the Q1 corporate Bitcoin adoption report, and some key stats from here. We have corporate Bitcoin holdings surged 16% in the first quarter of 2025 to 688,000 BTC, worth about $57 billion at the current price. And there are 79 firms, according to the report, now holding Bitcoin on their corporate balance sheet, and 12 new firms joined in the first quarter of 2025. Now, CEO of Bitwise, Hunter Horsley, says this marks the start of crypto's mainstream era, driven by institutional adoption, favorable accounting rules, and diminishing focus on altcoins.